There's been no end of reporting in the media about banking and finance during the last year, particularly thanks to the Royal Commission, the official findings of which will be out in a few weeks.
But even before the official findings come out, we've already seen significant tightening in home lending, which we believe is the biggest single driver of the house value declines that Sydney and Melbourne are currently seeing.
Yeah, absolutely. But the impact on the economy more generally is arguably more important, and that's starting to get some more airtime, particularly the ability for small to medium enterprises to access debt funding, which is so vital as privately owned businesses comprise the vast majority of employment in Australia.
Certainly when we've been working with clients that operate businesses, even those that are strong, profitable and growing, we've been seeing increasing tightening by banks, even though the bank CEOs and their advertisements talk about the fact that their doors are still open and that they haven't changed their credit policies.
Yeah, but we all know that that's not really the case, right? I mean, it's a bit of rhetoric that's not necessarily true. But in some cases, there are genuine reasons why the banks are tightening. I mean, one is the tightening regulation, which personally I believe it's a typical case of Australian government loving to over-regulate the hell out of absolutely everything, which in turn is causing unforeseen consequences.
Well, unforeseen by lawmakers and bureaucrats, but bleedingly obvious to many others.
Yeah, exactly. So I'll admit I have a bee in my bonnet about that. I do kind of feel like picking a fight with some bureaucrats about this idiocracy of some of the new regulations in business finance.
Mark, let's not go off on a tangent this second.
Righto. Enough of that in the written article, right?
Exactly. Okay, so these consequences that were supposedly unforeseen raise some of the big questions that are on the minds of business owners, CEOs and CFOs. What is actually happening in business finance? Are the banks still open for business? Are there real alternatives to the banks, whether you're a manufacturer, wholesaler, retailer, or whatever your industry?
Yeah, right. And to expand on that, we see very clear differences in access to bank facilities and alternative sources of funding based upon what industry you're in and whether you're borrowing 300,000, 3 million or 30 million.
And a question off the back of that, which people are interested in, whether they're a business owner or not, what might the effect on the Australian economy be over the next couple of years? Are we headed for a recession?
Yeah, which of course nobody wants except for the insolvency practitioners, right? But it's of course always prudent to be in business with eyes wide open without blinkers on.
So if you're interested in these questions, click through to read our latest article with our opinions on these questions.
Yeah, and as always, we do love to have a chat and argument online and offline. So feel free to leave us some comments or shoot us through a message, or we're always happy to jump on the phone and have a good little chinwag. Cheers.
Thank you. Have an argument.